Hello everybody, it's Johnny Seville from Acorn Wealth here, and this is your executive summary, and what a day for it. We had a great breakout in the market today. We were talking about this in our executive summary yesterday. We broke through the downward channel, of course, rallying off the ECB comments and just general positivity in the market. We've gone higher, broken through the open range, continued up, and now we're starting to approach this previous resistance over here around 2070. Now, because we're still in the upper range of the open range channel, we should expect to receive positive and bullish activity until the end of the month. So, the focus tonight will be on the bullish momentum types of plays that we can look for over the next couple of days of trading. So, what to expect tomorrow? Well, we do have a fairly bullish candle here, so we could expect a little bit of a retracement off of the resistance we see here. But nevertheless, that's a good opportunity to look for pullbacks on momentum stocks to support. Now, the first of which I found was something called LOCO, or El Pollo Loco. And this was actually one that came up in our Fallen Angel scan way back when here on Monday, January 5th. And of course, that had an extremely good rally up from $20 to the $25 level, pulled back to support, has been consolidating over this last little while, and finally broke out today. So this is actually one of my favorites because you can see this great accumulation on the money flow down below. We broke positive. We've been making equally high prices, but continually moving higher on the money flow standpoint. And if we actually go in and magnify this chart up a little bit and take us down to the hourly chart, we'll find something interesting. Okay, so what we see here is what's better known as a flag formation. So a flag formation is typically when we see a breakout of a diagonal or trendline based resistance, or possibly a horizontal based resistance point, which comes with or is associated with a high increase in volume. Now, if you look at the candles here from 9 a.m. Eastern, Wednesday, January 25th, we traded at 82,000 shares, and then over the following hour, 431,000. So there we see the pop in volume, which illustrates where the bottom of that flagpole is. Now, at the top of the flagpole is here, and if we actually measure that, you can see that what happens is after this flagpole, we then consolidate through this point, and that's the flag. So the flagpole then generally is what the measurement of the extension of that rally will be. And if we measure that, you can see it's almost exactly where we've rallied to. Now what happened then is we got an extension of another flag. So if we measure the top of the flag, we look at the breakout, you'll see that on that candle we've got 174,000 shares traded. You can see that on the bottom of the screen here. And then on the next candle, 704,000. So again, we measure from the bottom of where the volume kicked in, which is there, and this is potentially what we're looking at, a minimum of an extension from here onwards. Now that takes us from 2550 up to 2650. Now, if we go back, so if we look at that as a general target from 25-ish up to 2650, based on the hourly chart, we can now go back to the daily chart, and what we'll see is that based on the Fibonacci's, from the top here to the bottom here, we do a retracement, and you can actually see that the 38.2 Fibonacci is right there. Let's see if we can get the cursor to pop up at 2732. Now if we bring our support line back based off the bounce here we saw on November 20th, you'll see that the low of this candle is also 2735. So we've got this this correlation between the Fibonacci's and the support lines and the hourly chart. So we have a confirmed, potentially confirmed pattern on a flag basis as well as the daily swing trading basis. So this is something I'm looking to take a position in tomorrow, trying to target around the 25.50 area, something around that open tomorrow, and trading that up to a minimum of 26.86. But I'm actually looking to hold that as maybe a potentially longer term momentum play that could rally up to these higher levels up towards here at the 50%, which is at 29.40, which would be a nice little $4 rally or well above 10%. So that's the first thing that we're looking at is LOCO. Secondly is TERP. And if we go in and have a look at this one, you can see we've got a breakout of a consolidation, much like the market. Very bullish candle today. I'd be looking for a pullback on this one to this $31.13 area, simply because that will give us a little bit better risk reward. If we look at that trend line that we've broken through, a bit of a pullback to that area. Again, 31.13 is what I'm waiting for on that one. But a target of 32.86 will bring us right underneath this kind of resistance point. You can see these double tops here. The drop in the candle, kind of the downward movement associated with this downward decline happened after this support was broken. So that's the target we're looking at on that one. And if we look at the money flow, once again you'll see that very strong accumulation that has reached all-time highs. And last but not least, CMC. Now this is actually had a fair bit of insider buying, and of course you can see it's dropped a fair bit. If you look at the kind of 12 months highs back here at 20 bucks, you got a long-term kind of resistance line, and you can see it's just completely declined, dropped and dropped and dropped, and what you can see is what's actually now building is what we call a frying pan, or a fallen angel. And so we've declined here. We've got more than a 60-degree drop, which is usually associated with a cup and handle formation beginning. And we're just starting that potential upward move. Now, the risk on this one, or one of the risks I see, is that we could pull back and break the inflection point, or come back and pull back to the inflection point, which is a low of 1280. We're currently at 1370. But the upside potential, and this is a momentum play, is a retracement all the way back up to this moving average and this resistance point up around 1592. So we've got about a $2.20 potential reward with that kind of downside risk of, what are we looking at here, about $1. So a reasonably good risk reward ratio. And the way I'd be looking at that is an initial target of 1451 to reevaluate the technicals, but again potentially even further up. So those are the three on our list for tomorrow's watches. Hope that helps. Again, happy trading and stay safe.